Students, accounting conveys a lot of economic information. Now, most of this information is in terms of figures and in terms of data. So, there has to be a quality about it. So, accounting information has certain qualitative characteristics also. Now, what do we understand by qualitative characteristics? That is, qualitative characteristics. They are the attributes which actually increase the reliability, the understandability and the information part of the data. Now these characteristics are broadly divided into four parts. That is, any decision maker would actually look that the data is reliable. The data is reliable. It is comparable, it is understandable and it is relevant. Now, what do we mean by reliable? Reliable means it must be verifiable. Verifiable means, let us say you put an entry that there was a purchase of rupees 1 lakh. Now, that purchase must be verifiable. There must be a voucher or a document or a bill that supports that there was a purchase of 1 lakh. That is verifiability part. Next is faithfulness. That is, every data or any information that is conveyed must be in faithful manner. That is, it must be intended to convey the same meaning as is actually represented through accounts. Then we have neutrality. Neutrality would mean that any data that is being conveyed should be conveyed with a neutral intent. There should be no personal bias or there should be no inclination so as to reflect the data in a manner that increases the profitability or influences the decision maker's ability. Next is comparability. Now students, the accounting data that are conveyed can relate to various years, and there are institutions, individuals and bodies, they actually tend to compare data on long-term basis. That is, 1 year's performance with the previous year's performance. Then we have understandability. That is, the data must be presented in an intelligent, intelligible and understandable manner so as to convey the same meaning as is actually there. And the last part is relevance. Now relevance means it has two parts to it. One is timeliness. Now as you all understand, the data that is being conveyed should be relevant to the period about which we are talking. Let us say we are talking about accounting period year 2002-2003. But the information that is being conveyed is of 1998. This information is hardly required for calculating the results of year 2002 and 2003. So timeliness is very, very important. That is, the information that is being conveyed should be relevant to the time period the data pertains. Similarly, it must have a feedback value. That is, it must be capable of being up to the mark of the expectation of the decision maker and should have an ability to influence his decision and base his predictions.